Hi, I'm Brian, and today we'll be talking about the paper P5, March-June 2017 past year paper. And we'll be looking at requirement B over here in question 2. Advice on the extent to which target costing would help pit lane to achieve the financial performance objective set by the shareholders. Now, on my right hand side here, you'll see my 5-step approach to any P-level question. And for this video, which is the third video in the series, we'll be finally doing step 5, which is step 4 and step 5, which will be drawing from knowledge and answering the requirements. So in my previous video, we have already looked at the question. We've done step 2 and step 3, where we have found the relevant data and we have a bit of a background on how to apply this in our answer. So this is the information which I have extracted from the question. So if you'd like to refresh how we got to this stage, please take a look at the part 2 video, which is appearing on the top right of your screen. So now let's go into answering the question requirements. So the question is here, advice on the use of target costing. And before we start, we'll write a short introduction on what exactly target costing is about. So target costing is a market-based approach to costing, where we look at external elements. And if you would like a quick refresher on that, you can watch part 1 of our video, which is appearing in the top right of your screen. So we will be having 3 different headers over here. So these are the 3 steps that we apply when we're trying to use target costing. First of all, we need to determine target cost. We need to estimate the total cost to produce, and the difference between target cost and total cost, we will need to close the cost gap. So I'll be using these 3 lines as my headers in my answer. So my answer will be split into 3 headers, and I'll show you first how do the items on the left side of your screen here, which we extracted from the question, as you can see, para 3, and para 2, and how do they relate to these 3 headers over here. Okay, so first of all, let's talk about determining the selling price and target cost. And we'll be looking at project has limited life, which is over here, this particular bullet point, and is here. We will also be looking at pit lane will be selling to installers, which is this one. We'll be also looking at pit lane is emulating a scheme from another country, which is this one. We'll also be looking at pit lane plans to commit 2.8 million to develop smartphone app, which is here. And it plans to use high quality packaging from paragraph 5, which is over here. And the value of app is doubtful as most residents don't own smartphones, which is over here. Okay, and we will now be talking about estimating total costs. The main item here is pit lane has little experience in developing new products and estimating costs and revenues, which is over here. Okay, and closing the cost gap, we'll be talking about the costs which we can identify from the question. So first of all, you have pit lane appears to have production inefficiencies, which is over here. Subcomponents are bought in bulk from different suppliers, which is over here. Damage to fragile subcomponents by workers, leading pit lane to propose hiring more skilled labor, is over here. And pit lane staff not encouraged to provide input in the production process. And we have something which is not from here, but is linked to an earlier part, which is we could save some money by trying to reevaluate the need for the app and high quality packaging. Okay, so let's first discuss more in depth into determining selling price and target cost. Now, do you need to write every single one of these points in your answer? No. So you can probably estimate maybe 12 marks is about 1 page. So you probably want to have maybe 5 marks here, 5 marks here, and 2 marks for estimating total cost. So you do not need to write every line, but this video is just to help shape your thought process on how to answer the question. So let's take a look here. We'll first be looking at the project has limited life. So pit lane needs to be aware of deteriorating selling prices and whether their assumptions are reasonable. They did make some assumptions in the question over here. where you have 180, 170, and 160, and you also have deteriorating demand, 600, 500, 460. So we need to evaluate whether these are reasonable. That's what we have stated. Now, for pit lane selling to installers rather than consumers, selling price would need to be low enough for installers to make a profit, yet provide the necessary value to end consumers. One issue that we might discuss in our answer is we're not sure if the quoted selling prices in Appendix 1 are end customer prices or wholesale prices. For example, I'm talking about the prices which are over here, 180, 170, and 160. So if these are consumer prices, then they are not suitable to be used for our target costing approach because we are selling directly to installers. Okay. One thing that we are doing in as far as pit lane is concerned is that they are emulating a similar scheme from another country. So assumptions need to be made as far as to the reliability of this scheme. So here we have a few points. First of all, VLAN may have a much more mature energy market than DLAN. We can find this in the question prompt over here. So DLAN is wanting to encourage renewable energy generation, but VLAN has already had such a scheme. So it's possible that the solar energy market in VLAN is much more mature than DLAN, so these assumptions may not be correct. VLAN, of course, we have to talk about economics as well. Maybe the prices that we find in Appendix 1 over here could be from VLAN directly, and VLAN might have more purchasing power. So we need to make sure that the total market size and market share needs to be analyzed. One thing about market share is that pit lane assumes increasing market share over 3 years, as you can see, 10, 15, and 20, even in the face of increasing competition. So maybe the figures might not be reliable. We need to check. We need to have professional skepticism. And why is this important? Is because these two numbers over here, they help determine your units demanded. That means your 227,000 units we have calculated from these numbers, and this might affect your target cost per unit due to the fixed cost, the OAR, overhead absorption rate. Okay, so now we're going to talk about the 2.8 million to develop the smartphone app. We are unsure whether this expenditure would be useful and whether this 10% premium would be justifiable to customers. Obviously, in the question over here, the marketing department does not believe that it has the value. If we calculate it, 2.8 million divided by 227,000 units is $12.33 per unit in cost. So it is a significant amount. And if we look at our answer in part A, you might find that this is eliminating the app expenditure might even be enough to close the cost gap. The second issue is also on additional investment in high quality packaging, but the problem is that we are going to be selling directly to installers, not the end customer. So it's unlikely that these installers would find high quality packaging as a value add feature to justify the additional cost. This is $10 per unit. So if you adjust the app cost as well as the packaging cost, you might save significant amount of money per unit, and we can close the cost gap quite quickly. Of course, the last line over here is where the value app is doubtful, as most residents of D-Land don't own smartphones. So the potential take-up of the app would be in question. So as far as estimating total costs is concerned, pit lane has very little experience in developing new products. So because they have very little experience, we need to exercise skepticism when making evaluations on the assumptions which pit lane has made. So pit lane has made a lot of assumptions, including the market size, the selling price, the value of the apps, and so we need to exercise skepticism. This will be good enough for this part. Now I'm moving forward to closing the cost gap. So first of all, pit lane appears to have production inefficiencies. We would have found this early in the question over here in paragraph 1. So this has an effect on wastage and other production costs. If we go to the appendix over here, you will find that internal transport and handling is $7, right? So that is a significant amount. A possible implementation of a single production line and single factory to reduce internal handling costs. This is a recommendation, and it might require some upfront expenditure because you are adjusting things that has already been in place. So a new system would need some upfront expenditure. What kind of savings are we looking at? Well, internal handling costs are 5%, so 7 divided by 134 over here is 5% of estimated direct cost. So because of that, maybe the savings for inefficiency here are not so great, but they might be worth looking into in the future. That's the purpose of target costing, to help management think of what to do in order to close the cost gap. My second item, subcomponents are bought in bulk from different suppliers. This is from paragraph 6, which we will find over here. 6 different suppliers in D-Land, all of them local. However, they have specifically mentioned worldwide suppliers. So what we could do is we could source for components globally. This might help us save us money in the long run and probably take advantage of economies of scale in other countries. And we could also evaluate potential cost savings of a just-in-time system. There are some hidden costs which might not have been included in the direct cost. For example, because you're buying things in bulk, you might have damage, obsolescence, and things like that. So maybe a just-in-time system might help you to save cost. There's large potential cost savings because the cost of components is 70% of the estimated direct cost, as you can see over here. 94 divided by 134 is almost 70% of the total direct costs. Now, damage to fragile subcomponents is stated in the question over here. During production, subcomponents were found to be damaged during the production process, and they propose hiring skilled labor, which is 30% more expensive than other workers in the business. So we are spending unnecessary money. So let's take a look at how we can solve this problem. We could save money on having improvements on our training systems, and we could possibly simplify the production process so that workers may be hired at normal wages. We don't want to pay that extra 30% that we see over here. All right. We could consider automation on manufacturing process. If let's say it's a high volume, repetitive, but precision is required, then we could consider automation. 227,000 units is, although is not a very big demand or volume that we can use, but maybe we can explore that. That's why we use target costing to open up some avenues for us. We could possibly save quite a lot of money because assembly labor, including the 30% extra, is 16% of estimated direct costs. The third item that we can take a look is that pit lanes employees are not required to provide input into the production process. You will find that over here. So if we engage your employees, we could find out what are the problems that are leading to these high costs. Like for example, if we engage them and we build rapport with them, we find out why are the subcomponents being damaged and how come some employees are able to handle them without being damaged while others are not. And they could probably give us improvements or recommendations relating to how to improve the production process. And finally, we might need to reevaluate the need for the app and high quality packaging. Additional revenue earned, which they say over here is supposed to be 10% more than the estimated selling price of the competitors over here. And this figure may not be reliable as customers may not value these features, and this has been stated by the marketing team. They have questioned the value of these features. So a lower price point, that means you are on par with your competitors or even cheaper, may lead to better overall demand for the product. So this will help achieve our financial objective even better. Okay, so in conclusion, we can state that applying a target costing approach to boost a allows pit lane to identify cost gaps and market sentiment, allowing it to develop a more competitive product, and we can try to achieve our net profit margin of 15%. Okay, so this concludes a series of videos for requirement B from question 2. Please take a look at my other videos regarding paper P5, and thank you very much. You can download the answer as well as the questions from the links in the about section of this video, and please feel free to like and subscribe. Thank you very much for your time, and good luck with your exams.